I'm pretty good. How are you?
I'm good, thank you. How's
Yeah,
been your day?
it's been a pretty rough, long day, but we finally made it.
That's good. That's what's important.
Yeah,
So, from what I have noticed, I'm guessing you're a very busy person.
yeah, it's crazy.
Yeah, so I think looking at swing trading more often would help you a lot.
Hmm.
However, you already have all the necessary things because everything that we do on the smaller time frames is what you just use on the bigger time frames also. So, all you need to learn right now is how to read candles and try and catch the early signs before the full confirmations.
Right. Yeah.
Yeah. So I was thinking, since your account is not ready yet, maybe you can practice with the demo trading account.
Okay.
Yeah, so that you can just try to analyze some trades whenever you have a chance
Mhm.
and see how it goes, so that we
Okay.
can see where you're leaning towards to. Because you might think that you like this paper, then it turns out you trade the other pair better than the one you're
Right.
trading.
Yeah. Hmm.
Yeah.
Okay.
So we'll keep looking at the same pace though. Nothing will change. Only that
Yeah.
we're going to include higher time frames also. How to look at higher time frames also.
Okay.
Yes. So, let's get started for today. We're on gold right now. This is gold, and
Hmm.
well, it's been an uptrend. Remember, like the last time we talked, right? We looked at this area. I think it was around. I think it was around here. We talked about this area, right?
Yeah.
And then we talked about price making a weak fill around here. And if it starts trading in this area, then that means price is higher chances of breaking out and continuing to go up.
Yeah.
So
Hmm.
we had said that if price wanted to push lower, it was not supposed to break this resistance.
Right.
Yes. So I'm thinking if we are to put our zones now, let's say updated zones, right? Let's put our new support right here. Our new support right here. And
Hmm.
then let's put our new resistance right here. So now price, if you're analyzing it now, right? So price came all the way up, right? Gave us a small retracement and then it pushed further up and
Hmm.
then it came back down, right? So we can look at this high that was created here, right? And then we can sort of say this was a retest and now price should push further
Yeah.
further up, right?
Yeah.
So having that in mind, let's look at the wave count. If you remember the wave count, remember we said we need a 5 wave for us to say the trend is now potential to change. So
Yeah.
if we are counting this, we would say this was our one, our tiny two, three, four, and five, which means the wave is complete, right? This is complete. So if it's complete and price is made a weak view, right? See this
Hmm.
week, and if we are putting our zone right there, we can safely say price could be rejecting this resistance because
Yeah.
now there's an order block right here, so they might have put their orders right here. If you
Hmm.
watched our last, we did a stream on order blocks.
Yeah.
That would mean that they have a huge number of orders here, right?
Okay.
And they pushed price lower. And when price came back up, it didn't dip into the high exactly. It rejected
Hmm.
it. And ever since price hasn't managed to break this resistance. So I'm thinking if price is right here and it has completed a 5 wave right now, we
Hmm.
could see price give us our M reversal pattern. So this is how you anticipate an M formation or a reversal pattern.
Right.
So we saw price come back down, right? Give us support again right here, and then we're seeing price pushing, right? And if price comes back all the way up, right, as long as it rejects this high, it will push lower. So we might see price even make a longer wick, dipping exactly into this high right here.
Yeah.
Even make equal highs with this wick right here. Either way, as long as price does not close above this zone right here. So it can make a wick, but it can come back and close back in the range. So
Gotcha.
if price is closing back in the range, right, then we might see price come to break this support, right? So we might see we might see price, let's do it like this. We might see price come back, break into this support, right, make a low, give us a right shoulder, and then drop back to this level
Yeah.
right here. So if we are seeing price do this, right, then that means on a bigger time frame, we're seeing price make 1, right, and this would be 2, and then we'll get 3. That's exactly how you read price action for a bigger time frame.
Bigger time frame. Okay.
Yes, so we anticipated the drop, and if we have the chance, if we manage to catch the trade, we will be included in the drop, right? When the drop is finished, we're going to be watching this area right here to see if price is going to be showing us strong bearish pressure or strong bullish pressure. If we have strong bearish pressure, then we're expecting to buy around this area. We're looking for reversal patterns around this area. But if we do get a strong bearish pressure, right, then we're waiting for a break below. So we always have both ideas, but we know what we're looking for if what and what happens.
Gotcha. Okay.
Yes. All right. So this is the 4-hour time frame, right? Now let's go on our daily time frame. All right, so this is the daily time frame. Now, looking at our daily time frame, if you remember our reversal patterns, can you notice something?
See, there's an M, right?
You at the bottom, see 1, then it made 2.
W. Okay.
Exactly. So, looking at our daily structure, right? I'm not sure if it was you, but the last time we talked about how price is consolidating between these 2 points. Do you know why it's consolidating between those 2 points? Because if you go on the weekly time frame, right? Let's go on the weekly time frame. This is the weekly time frame. So if you go on the weekly time frame, there is this point right here. If price breaks this low, high chances gold has lost or a lot of value, because it will have to drop all the way down here. And that would also mean the trend is changing, because as you can see, price was making a bullish trend, and it looks like it broke out around, so it broke out here, right? It broke out here, and then it consolidated around here before it pushed higher. So this is our order block that's telling us if price breaks this area, price is now in a bearish trend. So now looking at our daily time frame, right? Looking at our daily time frame, we would say we are expecting bullish, we are expecting a breakout. This could be a reversal because it's an M already, but we both know that price has high chances of breaking and pushing lower. It has high chances of rejecting this area, and then it pushes lower to make a third leg. So having that in mind, right, we can notice that price is almost at the resistance. This is the resistance, right? The new line that I just put. So what we can do, right? Oh my bad. Okay. what we can do, right, is we can now then say if price rejects the area where price is at right now, if you can see it, where price is right now, if it rejects that area, right, if it which it looks like it's rejecting, if it keeps rejecting this area, right, and then price drops all the way down here, right, and then price comes to reject this price action, right, if it rejects this area and it pushes back up into this area, then we know on the daily time frame it's about to break out.
Okay.
So this structure on the 4-hour time frame, right, would then give, if you were looking at the trade on the daily time frame, right, it would then give you the opportunity to enter at a nice entry, because maybe let's say you missed the initial rejection right here. See, this was the initial rejection, right? Let's say you missed this. You missed this rejection, right? Of course, price pushed all the way up and then you didn't get the chance to actually enter. And now you don't want to enter at the top because it might reject. So what you want to do is you want to wait for price to come all the way down and then push up.
Yeah.
So that's why we're saying on the daily time frame you have this whole setup in mind, right? But when you look at the 4-hour time frame, you also know that price has high chances of rejecting this area, right? Come all the way down to give you bullish entries. So what you can do in the meantime is you can trade price all the way down, and then when it reaches this area, you take your profits and you start watching price. Is it going to break or is it going to reject? If it rejects, then you buy, right? You buy with let's say some trades with their profits around this area, right? Because we know that prices might reject this area. Then you leave, let's say, 1 or 2 trades open that are going to break out as price pushes higher on the daily time frame.
Yeah.
So that's that's swing trading. So you have to be able to read market structure. If it's going to go up or come down first before it reaches a certain level, and then from there you trade it to the next level.
Yeah, got you.
Yeah. All right.
Then I have to focus on swing trading.
Yes. So let's say I would not say concentrate on the 1-hour time frame. I mean, you could concentrate on the 1-hour time frame, right? But then the 1-hour time frame has more action. Is more action that's happening, right? And I'm not really sure how you would react to that action, emotionally and stuff like that. So I would say concentrate on the 4-hour time frame, but as long as you understand that the 4-hour time frame, right, it will give you signals, but they will take time to actually fill out because it's on the 4-hour time frame. So you can't expect it to complete in 2 hours or 3 hours. You have to give it 4 or more hours.
Yeah.
So 4, 8 hours or even 12 for it to actually complete what it's doing, because it might start ranging on the 4-hour time frame. That means you have to wait 4 more hours for it to break out and then reach your take profit.
Right. Yeah.
So it's more of a person who has other things to do.
Yeah.
But can still trade. So they can look at the markets at certain times and set their limits, but they can still do other things.
Right.
Yeah.
That's pretty good.
Yeah. Let's see if we can look at another pair. I think New Zealand dollar. All right, let's do New Zealand dollar. All right, this is New Zealand US dollar. And remember, we talked about this pair. We talked about how price came down, retraced, consolidated, then came down, consolidated a little bit right here, and then it dropped. Remember? Then we talked about how price made a low right here. When price made a low right there, we talked about how we were expecting price. Was it on the 104? Let's do 4 time frame. We expected price to reverse around this area, and we watched price make a low right here, It made a high right here. We watched that, and we watched when price was at this low, rejecting this area. And then we also discussed about how price should range around this area before it pushes up completely. As you can see, it made a small range there, pushed higher, made a new high, and then it started ranging on a bigger picture. So
Yeah.
if price is going to continue going, pushing up, is we were expecting price to at least retest this area, because all the other pairs have retested that area. So if price does manage to reject this low, we will see price push all the way up here. So let's say you wanted to enter this trade, right? You saw price at this low. You saw it reject, right? And then started making a range right here. So you want to enter here, right? Let's say you entered when price was making this low, and you've been watching price come back to your entry. For you to enter now or to keep your trade, that means if you had not put your stop loss on break even, that means you're watching this low. So you're expecting price to firmly reject this support for price to push higher. But you also know that if price does break this low as it's doing right now, it's pushing lower. It hasn't broken yet, but it's pushing. If price does break this low, then that would invalidate the bullish retest. That would mean price gave us a reversal, right, to go all the way to the support, and then at this support we will know if price will reject or will break low.
Yeah.
So that would mean this was an impulse, and then this was a correction, and then we might be getting the next impulse.
Yeah.
So with that in mind, here's what you do. Because now there are two scenarios that are really good. So here's what you do. You either watch out for a daily candle that will close outside or above. So right now with price pushing lower, right? If this support does break, we might get a daily candle closing below. But if the daily candle does not close below, then we're expecting price to reject that low. The reason why we're saying daily candle is because if you look at the time, it's pretty late, and there isn't going to be anything that's causing that much volume unless the news that's coming later does make USD lose, if the news comes out negative.
Yeah.
The news or the speech, one of those two. But if it comes out negative, then that means this would push further up. And if it pushes up, that means it's rejecting this low. And if it does reject this low, and let's say it comes back to close, let's say somewhere around here, then we might see price breakout tomorrow or the day after to come all the way to this resistance.
Yeah.
But if we get a daily candle that closes below, then we can say price is going to push lower. So the reason why we're saying daily candle, right, as I said before, it's because of the time. It's late. And second thing is, if it was earlier, let's say around 11 or 9, right, we can say the 4-hour time frame or the 1-hour time frame to close below. So you could actually watch the 1-hour time frame close below and trade that as it retests and get a good entry and all of that. But if you now look at the time, it's now late. So it's now more for people who are going to be in the trade for a very long time. The time now is not for people who are looking to get in and out of a trade, because people are looking to get in and out of a trade. They come at a certain time, and that's what they are looking to trade, nothing more.
Okay.
So we have a reversal pattern right here. If you can notice it at the bottom, first one, big first one. And then we have a range, a reversal pattern, right? So maybe we might get a range and the price push lower. Because price, it not that it always repeats itself, but it does things that are very similar.
Okay.
So as you can see right now, it looks very similar from the beginning with price pushing up, right? We got a
Yeah.
range right here, and then price pushed up nicely, it pushed down nicely, it pushed up nicely, it pushed down nicely. So we could get a range and then price pushed lower. But then
Gotcha.
as you are watching, right, also just watch out that price might just push lower without having a range. It might just drop without having a range, because that would mean that they have enough people buying around this
Yeah.
area. Because if people keep on buying, price will drop.
Nice.
So if we go on the 1 hour time frame, right, 1 hour time frame also tells you what to expect. Was 1 hour time frame, let's say you want to enter now, right? And then you were entering, let's say, as you can see, price made a low right here. And then let's say you're entering, right? One might actually enter right here, trading it all the way down here to maybe this week to make a week fill right here.
Yeah.
See, so if you trade it to make a week fill right here, right, you're taking your profits here, right, and you're sitting for a little bit, because price would dip down into here, pull back a little bit, that's what it does, and then drop.
And then drop. Okay.
Yes, that's when you would notice price not making a range like it did right here. This is the range
Okay.
that we're talking about. So you might see price come back, hit this low, and make a range. That's what we are saying. But even if you look at this range, right? If you look at this range, we have price come up, right? Create an M formation right here, right? Price came up, created an M formation again. And then if you look at this also, price created an M formation and then dropped. Price came, created an M formation, and then it dropped. So what can we expect when price come all the way down? We can maybe expect it to make an M formation, maybe one or maybe even two.
Yeah.
With price then dropping.
Yeah.
Because that's the pattern that it's been showing us. So we can expect it to give us the same patterns.
Yeah.
Yeah, so it's not that if it doesn't give you that pattern you don't trade it, but it's more of if you are watching it, right, and you see the pattern happening, then you know this is a good trade. You can even risk more on that trade because you are sure that it is high chances of fulfilling.
Yeah. Okay.
Yes. And then the 4 hour time frames, you can see how they're small. The patterns are even showing on the 4 hour time frame.
Yeah, I see it.
Also, another thing to notice, that would mean if you look at this price dropped, it made a continuation pattern, is an M formation.
Yeah.
This is how you master a trade. Master a pair.
Okay.
See, we have identified the same patterns, not even over a long period of time. This is a very short period of time. If you're looking at the market from here to here, that's not a long period of time. And we've noticed one exact pattern, and every time it happens, it fulfills. So now you know if I'm trading New Zealand dollar USD and I see an M formation happening or a head and shoulders happening, I'm entering that trade.
Yeah.
So that's how you actually master a pair, because a pair will repeat the same patterns over and over again.
Okay.
And you want a pair that gives you patterns. You don't want a pair that doesn't give you patterns, because if a pair doesn't give you patterns, right, then you're not really going to have a good strategy, like a strategy that you can have discipline and follow every single day. It's going to be different.
Okay.
Because if we're looking at this one, right, remember we even started looking at this pair. When we started looking at it, we talked about how it had good market structure, like it has good patterns that you can follow. Because I just put back the chart a little bit, and we can even see we have another M formation right here that's happening, head and shoulder sort of thing that's happening. If you pull back, we have countless M formations happening. M formation, M formation, W, M, head and shoulders. See, now that's a good pair to look out for trades. Because when a trade is about to happen, right, you can beg on that trade because you know it is high chances of fulfilling. If I was to look at, let's say USD JPY. Let's say USD JPY. All right. This is USD JPY. This is the chart for USD JPY. I'm actually going to put it on the daily for us to see something. This is the chart for USD JPY. It's trending, but it doesn't have any structure. Look at this. Yeah. There's no structure at all.
Yeah.
So for you to actually catch a really nice trade, you have to maybe target places like, look at this week. You have to target those weeks. So you will have to put your sell limits around that area, or your buy limits around these areas. Those are the areas that you would want to target, like the areas that seem very significant, areas where price hasn't been in a while, those kind of areas. But if you want to trade it, but then this is the weekly time frame. So considering that this pair doesn't even actually move, like its pip count is very low. It's not different from pound USD or gold. Those have high pip values. They have a high pip count. This one does not have a high pip count. That means this one can move 5 or 10 pips in 2 hours, when pound USD can move 50 pips in 2 hours.
Okay. Gotcha.
So that means it's in the same area for a very long time, and this is the weekly time frame. So for you to catch a really good trade, you would have to wait weeks and weeks and weeks. If we had to look for on the daily time frame, you can maybe use the daily time frame. Okay, let's say if you're looking at the market structure right here, let's say price had a high right here, right? It broke a high right here, right? And then it made a new high right here, right? We can say price came up, now it's coming down to retest, and we can watch out for reversal signals right here, right? For price to reverse and push further up. Now, if we go on the weekly, where is it pushing further up? All right, on the weekly, we can say price is pushing further up to this level. Let's say that, right? So okay, so we have bullish analysis, right? If we're going to be having bearish analysis, then we are waiting for price to break this low, but that's going to take a long time before price actually breaks this low. So you'll be waiting for a longer time than if you're trading pairs with structure, because when the structure is still happening, right? And since you are mastering the pair and you're now understanding and anticipating these structures, you can trade those structures. So everything that you make from, let's say, when the structures are completing, that's just your bonus, because you have already gotten your share.
Right.
Because this one, I can't really look at it on the 1 hour time frame. If we look at it on the 1 hour time frame, what does it say? We have a consolidation right here. This is the first one. And we have a retracement. And then if price fell, we have some sort of an M formation and price fell. But it's not really good structure that you can actually use, because even the zones, they all cut through into each other. Because if I have a zone right here, right, I'm going to want to make a zone right here, or we're going to have to watch this zone right here around this area. Then we're going to have to watch the zone around this area, and then we're going to have to watch this zone, and then this zone. So this is the only time we can actually say this is a good trade right here. But what if price comes all the way into here? You have to wait through price passes all these zones, because they all cut into each other. They are not really, they don't really respect the zones.
Yeah.
Because the thing is, this pair is known to be advised for beginners. Most beginners are taught to trade this pair.
Mm-hmm.
So if they know that most retail traders are trading this pair, this is the pair that will have the most complications when you're
Right.
trading. But right now, if you had to look at this pair, we can say we have some sort of a consolidation that was dropping, right? And then we can say price came up, retested, right? And then it rejected. But then look at the way these candles are moving. Of course, it's a rejection, right?
Mm-hmm.
But then by the time it gets to this point, you're already tired and you want out. And that's when price actually pushes up in a proper manner.
Right.
But then by the time the trade comes there, you have already given up on that trade, because these candles have no volume. So if these candles had no volume, right, that meant price was going to fall around this area. There were high chances of price falling to that from that area, right? So if we're saying what caused this breakout, then that would mean probably news happened. There was an announcement or something unexpected that happened and pushed price higher. Otherwise, price wouldn't have pushed higher. We could have seen price rejecting. So if the USD news came out, let's say negative, we could have seen a strong rejection here. If, let's say, maybe the pound news came out negative, that's why maybe price pushed higher. But
Mm-hmm.
it's more of it's a tricky pair to trade. It's
Yeah.
a very tricky pair to trade. Well, are you understanding, or do you have any questions?
Yeah, definitely. I have to keep an eye on market structure even more now, because that seems to be like the key.
It is the key.
Yeah.
You don't even need much.
Right. Yeah, I don't know. I'll just like I check out a lot of traders on Instagram, and they have all these indicators and all that. Like, but it's like you don't even need it really.
Yeah, exactly. Because they don't even use it to.
Yeah.
Most of them don't even know how to read the indicators properly. Because the thing with indicators, right? An indicator is more of something that someone created, right?
Mm-hmm.
Using their strategy and how they wanted it to work for them, right? And then it
Mm-hmm.
worked and people wanted on it. So they would sell it to other people, and then it ends up getting popular, right? With the way they wanted it. So if you are a trader, you're gonna have your own way of trading.
Yeah.
And let's say maybe that indicator is not meant to trade the same way you want to trade or the same way you trade. So you could be watching certain levels and they might be reacting, but a trader won't know how to actually use them to their advantage.
Yeah.
So indicators are very complicated. It's not
Right.
something it's not something that I would advise anyone in using.
Yeah.
But do you have any questions? Are you understanding well?
Yeah. Yeah. I'm definitely following you explain very well. So
Do you read?
as far as what, like,
Do you read?
I just look at I just look at the charts and some videos.
If you want to succeed very well in this game, I would say understand candlesticks.
Candlesticks, right? Okay.
Yes. Because the thing with candlesticks, right, is you and I could be looking at the same trade, the same setup, right? But if you can't read the candlesticks,
Uh-huh.
then it's not going to help you. For example, let's say someone was going to read this market structure right here. Do you see these candlesticks right here?
Yeah.
All right, so now let's look at them one by one. We had price make a strong bearish move, right? And it rejected strongly, right? And then it made the first bearish candle, the second bearish candle, right? And then it made a bullish candle right here. But it's a very weak bullish candle. So someone would say maybe price is creating support or retesting for it to push further up and reach this level. You get what I mean?
Yeah.
However, here is the tricky part. Price made the first bearish candle, right? Second one, right? And then this is a very weak bullish candle. Right? If we go on the 4-hour time frame, 4-hour time frame, we had a very nice wick right here to fill out right here, right? But then as much as we had a very nice wick to fill out right there, right, we had to watch out this area. Look at this area. So there's support right here, right? Because price is in a range. That's what people don't realize. Price is in a range. We have resistance. We have support at the bottom. See, this box that I put. That's our support. This is our resistance. Let me put a line actually. Okay. Okay, this is our support right here, and this is our resistance. So if price wanted to push higher, price would have pushed higher around any of these candles would have pushed higher. Any of these 3 candles would have pushed higher. Even maybe this candle would have pushed higher. This bullish candle, right? If it wanted to push higher, if price wanted to push higher, this bullish candle would have closed as a strong bullish candle. Because if it reached all the way here, then that means price could close back all the way there.
Yeah.
But price didn't. It closed below the range. So the moment price closes below the range, right, we had very high potentials of a weak fill trade. This is the weak fill. Price filled this area. And it also had high chances of breaking, going to the next support. And that's exactly what price did.
Yeah.
I'm not sure if you can see it properly.
Yeah, I see. That's how now I understand how candles can actually.
Yeah, so it's very important to notice where is your range, because when price is moving, right, it's moving to a range or from a range. So if it's moving from a range, right, then that means there's a very certain possibility that on the higher time frame this thing did actually break it close below. Because if I was coming on the market that time, right, and I check my 4-hour time frame to see what's happening on the 4-hour time frame, and then it gives me a very suspicious candle. Actually, this is a pin bar. This is called a pin bar candle. It's a very good rejection candle, a very good reversal candle, and it's a really good candle to trade. However, this candle does not have a body. So a good pin bar should be like this. Can you see this candle?
Yeah.
Or this candle.
Right.
So I want you to look at the body. So a good pin bar should have that body, even something a little bit bigger, but at least it should have a body with a certain let's say bullish or bearish, to show you who's controlling because as much as we might be equal in that candle, there's a little bit more of sellers or a little bit more of bears. So our pin bar didn't have a body, so you were still looking at that range, because even besides looking at the pin bar, price was ranging before the pin bar happened. It broke out, it came back to close in the range. If price wanted to push higher, the first 1-hour candle of this 4-hour candle should have at least pushed a little bit higher and closed above, or maybe 2 candles after. It should have closed above, but on the 1-hour time frame, it was closing below our range. That was the signal that price is high pressure, has high chances of actually dropping. So all you had to do was to enter the moment this candle opened. This moment this candle closed, even towards its closing. When it's about to close, you enter. and you'd have
Mm-hmm.
really good risk because your stop loss would have just been right here
Above, yeah.
above this candle, and your TP
Mm-hmm.
would have been 1 and 2. Very good risk.
Nice. Wow.
Yeah, but it's the small things that matter, you know?
Yeah, right.
The small things. Yeah, it's the small things. There was a range. There was a range right here. And price was rejecting that range.
Yeah.
All right. You still no questions?
Nice. Just the candlestick. So you sent already the one thing about candlesticks. That was pretty helpful. I'm
I
gonna go over
sent
that
you a
again.
very small book on candlesticks. I have no idea
Yeah.
if you finished it. If you want another
Yeah.
one, it's big. So
Okay.
you didn't finish the small one. I don't think you'll finish that one.
Okay. Gotcha.
But let me find something small again.
All right. Perfect.
Yeah, so that you have like different explanations, which will juggle your mind.
Yeah.
Yeah.
And do you have another one, maybe a small book about market structure to just go through it again?
Yeah, I have a few. I'll send them to you.
Nice. Okay. Great.
Yeah.
Thanks.
I think that's good for today.
Yeah. So you available tomorrow?
Yeah.
Perfect. Okay. Then I will text you and let you know.
All right, sure.
When exactly? Great.
Anytime you're available.
Yeah.
Mondays to Fridays, at least half of Fridays. I'm more concentrating on trading.
Yeah. Gotcha. All right. Then text you tomorrow.
All right. Enjoy your evening.
Enjoy your evening. Thank you very much.
You too.
All right. Bye bye.